Begin today on the second part of our Hong Kong Potential Value Stock series. Last week, Mr. Wong went through two counters already. So please, if you're still not aware that this is a value stock series, we still have two more webinars with Mr. Wong. So try not to miss out. Thank you very much for leaving out some time to join us today. And I would now like to hand over the time to Mr. Louis Wong to continue on to the second part of the Hong Kong Potential Value Stock series. Thank you, everyone. Mr. Wong, please. Thank you.
Thank you. Good afternoon. Welcome to Hong Kong Potential Value Stock Series 2. Last week, we presented two Hong Kong companies which we think have potential values, namely Chow Tai Fook and Wong. Okay. This week, we'll follow up with the target price. Because last week, we did not provide the target price for the two companies. So this week, we'll follow up with the target price of for Chow Tai Fook and Wong. And also, there are two outstanding questions from the viewers last week, which I will also follow up later at the end of my presentation today. Okay, so today we'll present two other companies which are of potential value. First one, Sinopharm. 国药集团 Sinopharm. Sinopharm Group is the ticket is 1099. It's a distributor of pharmaceutical and healthcare products and a value-added supply chain service provider in the PRC. It operates through the following business segments. It has three business segments, namely pharmaceutical distribution, retail pharmacy, and medical device. So it's not engaged in the manufacturing part. It's more on the downstream distribution and retail part. The company is the largest pharmaceutical distributor in China with 20% market share. Its parent company is China National Pharmaceutical Group Corp, which is one of the state-owned enterprises held directly under state-owned asset supervision and administration commission of the State Council. So these are regarded as Yangqi, state-owned enterprises, enterprise under the 国资委. 国资委 is state-owned asset supervision and administration commission of the State Council, 国务院下面的国资委. Okay. This is the latest financial performance of the company, the first quarter financial performances. Revenues increased by 1.16 year-on-year to 162.5 billion Hong Kong dollars. And operating profit was 47.1 billion. Operating profit margin 2.9. You may wonder that it's rather low because for distribution and retail business, you don't expect a very high profit margin, unlike the pharmaceutical company that's engaged in pharmaceutical manufacturing, which can claim 70% or up to 80% gross profit margin. But for retail and distribution business, the profit margin is rather low. It's a volume business. Net profit was 1.567 billion for the first quarter, and net profit margin was close to 1%. Earning per share 0.51, ROE 1.88%, and ROA 2.36%. But if you look at 5-year revenue growth, you can see that the company's revenue grew very steadily from 425 billion in 2019 to close to 600 billion in 2023. Okay. Just now we mentioned it comprises 3 business segments. So 72%, you can see here, the dark blue color represent the pharmaceutical distribution business. The pharmaceutical distribution gives the company the bulk of the revenue, accounting for more than 70% of total revenue comes from pharmaceutical distribution. Okay, and over the last 5 years, you can see pharmaceutical distribution revenue also posted stable growth over the last 5 years. And then 22%, around 21, 22% came from medical device, okay, medical device, and 2% from 6% from retail pharmacy, 5 to 6% from retail pharmacy. Other business accounted for around 2%. Okay, so there's the revenue by segment breakdown of the revenue for the last 5 years. This is the first quarter revenue. Okay. Let's look at the three individual business segments. For pharmaceutical distribution during the reporting period, 2023 financial year, the pharmaceutical distribution business recovered rapidly after the COVID-19 pandemic, growing by 8.47% compared to 2022. Yeah, this is the revenue growth. Operating margin remains stable, though there's a slight decline from 3.18% to 3%. Okay, that's the operating profit margin for its pharmaceutical distribution business. Okay, the medical device segment revenue increased by 7.75% in financial year 2023 from 2022. Operating profit margin was under a bit of pressure, declining from 4.21% to 3.48%. Okay, but higher than that of the pharmaceutical distribution business. Okay, the company focused on extending supply chain services and actively undertook projects such as management of equipment and assets and maintenance services to provide more diversified services. SPD service, which stands for Supply Processing and Distribution Services and Medical Testing. Okay, so it is providing a wide range of medical device business to its clients. Okay, as for retail pharmacy, during the reporting period in 2023 financial year, the group revised and improved the 14th five-year plan development strategy of the retail pharmacy business and further promoted the implementation of core strategies such as wholesale plus retail integration and pharmaceutical device synergic development to strengthen the improvement of operating efficiency and profitability of the retail pharmacy business under the premise of ensuring steady sales growth. Last year, its retail pharmacy revenue increased by 8.22% from 32.9 billion yuan in 2022 to 35.6 yuan in 2023. An operating margin among the three business segments, this is the only business segment that show improvement. Operating margin improved from 2.48% in 2022 to 3.21% in 2023. Okay, number of retail pharmacies. The group strengthened the network layout and regional coverage of its retail business, focusing on improving the coverage of business blank areas. In those areas that it has no coverage, so it strengthened those areas, and also medical institutions, to improve the coverage of medical institutions. So in 2023, it has a total of more than 12,000 stores in China. Guoda drugstores, Guoda is brand name, accounted for more than 10,516 stores nationwide, and professional pharmacies, for professional pharmacies, there are 1,593 and also 1,127 dual channel drugstores. Dual channel stores refer to those including Guoda drugstores and professional pharmacies. So these 1,127 dual channel drugstores are made up of 397 Guoda drugstores and 730 professional pharmacies. So all three kind of stores, retail pharmacies, saw growth in numbers of branches number in 2023. Okay. The business highlights include continuous market share gains from industry consolidation. In terms of retail pharmacy, favorable policies and store expansion drive its growth. Long-term benefits was brought by policies allowing retail pharmacies to join outpatient reimbursement. In the past, let me explain a little bit. In the past, 医院 in China, they operate their own outpatient reimbursement. So it caused pharmaceutical prices to remain at very high level. So now the policy allow retail pharmacy not related to, hospital non-related retail pharmacies to operate pharmacy stores in outpatient department under different hospitals. So this bring long-term benefits to the retail pharmacy business of Sinopharma, and also accelerated store expansion. It added 1,203 Guoda drugstores in 2023 and 153 professional pharmacies in 2023. As for pharmaceutical distribution, sales rose steadily on rising economies of scale. Volume-based procurement policy adopted by China, 大量采购, leads to market consolidation and expanding market share. The company adopts strategic transformation by embarking on the high-margin marketing business. Drug marketing revenue up 30% year-on-year in 2023. Okay, so it focused more on high-margin business. As for device distribution, its one-stop supply chain service is one of its competitive edge. Improve one-stop supply chain, and it signed a JV agreement with GE Healthcare, and its Xinguang's registration for endoscopes has been approved. So this will drive future growth of its device distribution business. Okay, now it's trading around $21, and year to date is only up 5%, lagging behind the 11% rise for the Hang Seng Index. So it's one of the laggards. Okay, this is the 5-year historical PE forward PE band for the company. Now it's trading between -1 standard deviation and fair value. So the target price, let me show you the target price for 1099 Sinopharma. With the estimated earning per share of 3.05 renminbi, 3.05 yuan for financial year 2024, and fair value at 6.927 times. This is the fair value. The target price will be 23.24 Hong Kong dollars, implying close to top 10% upside of its as of the current price of $21. Okay, if it manages to the valuation manages to go up to +1 standard deviation at fair value is 6.927. Fair value is 6.927 times 7 times. So at 6.927 times and a forecast earning per share of 3.05 yuan, it will give you a target price of 23.24 Hong Kong dollars. But assuming the valuation goes up to +1 standard deviation at 8.699 times, and with forecast earning per share of 3.05 yuan, it would give a target price of 29.1 Hong Kong dollars. That would be 21 close more than 30% upside as of its current price of 21 Hong Kong dollars. So that's for Sinopharm Group. The other company which we think also has potential value is BYD Electronic. The ticker stock code is 285. Having started operations in 2002 as a division of BYD, BYD Electronic mainly focuses on manufacturing handset components and modules. The company was spun off from BYD and listed on the Hong Kong Exchange in December 2007 and expanded into more areas, including assembly services, auto electronics, and intelligent products. It provides customers with one-stop service that comprises new materials development, product design and development, manufacturing, supply chain management, logistics, and after-sales service. Okay, this is its financial performance for financial year 2023. Revenue was up more than 20% to 143.8 billion dollars last year. Yuan, it should be yen, sorry, for the typo error here. And operating profit was up more than 2.5 times to 4.18 billion. Operating profit margin was 2.91%. Net profit was 4.46 billion, and net profit margin was 3.1%. Earning percent last year was 1.98 yuan. 1.98 yuan. ROE 14.7% and ROA 5.6%. Okay. Its first quarter earnings was in line with market expectation. Revenue in first quarter of 2024 was 36.4 billion yuan, up 38.3% year-on-year, and net profit was 610 million yuan, up 33%. So both its revenue and net profit in the first quarter this year were up more than 30%. Thanks to revenue contribution from Jabil plants, which it acquired, and also recovery of Android business, as well as the further development of vehicle electronics business. The company directly benefits from the new energy vehicle sales of its parent company, BYD 1211. BYD company's revenue rose 4% year-on-year to 125 billion yuan in first quarter 2024, while profit rose 11% year-on-year to 4.6 billion yuan. Profit per vehicle for the first quarter this year was 6,700 yuan, down from 8,500 in the fourth quarter last year, mainly due to intensified price competition and intensive R&D investment by BYD. BYD is expected to record a year-on-year increase of 24% for new energy vehicle sales in 2024 and 18% growth in 2025. Okay, so its vehicle electronics business will benefit from its parent company, BYD. The shift of orders from Apple to suppliers in mainland China continue, which will also benefit BYD Electronic. The company is expected to increase its market share in the iPhone value chain. It is also expected that the AI iPhone will support the premiumization of smartphones and boost the company's handset assembly and components business. Okay, this is about its acquisition of Jabil Mobility in September 2023. It is expected the acquisition will create synergies with current component products and drive share gains in Apple product categories. So it's expected to help drive its market share in Apple product categories going forward. A significant sales boost for component business is expected once the acquisition is completed, given Apple's new high-RAM model ramp-up potential. This chart shows Jabil's mobility segment revenue from 2019 to 2023. Okay. This is about China's NEV, new energy vehicle sales. The penetration rate now has risen to as a whole, because it includes different types of new energy vehicles. Here we maybe look at battery electric vehicle and plug-in hybrid electric vehicle. Okay, so the in total, new energy vehicle penetration rate has risen to more than 35 to about 35% in China. The penetration rate keeps rising and mainly driven by battery electric vehicle. Now the penetration rate is close to 40%. And the penetration rate of plug-in hybrid electric vehicle was around 15% in 2023. Okay, so both type of electric vehicles saw their penetration rate rising quite rapidly over the last 3 years. Okay, and China extends NEV tax reduction and exemption policy to 2027. So there's clearer visibility for the next 3 years. Starting from September 2014, actually, the Chinese government has exempted the 10% purchase tax on qualified new energy vehicles. This exemption applies to both domestically produced NEVs and imported models. Under the extended policy, NEV vehicles, new energy vehicles, purchased in China between January 1st, 2024 and December 31st, 2025 for the next year, it will be granted an exemption from the purchase tax amounting to as much as 30,000 yuan per vehicle. So in the past, they exempt all the 10% purchase tax, but starting from 2024, they implemented a cap on the exemption, the purchase tax exemption per vehicle, up to 30,000 yuan. Recent data from the China Association of Automobile Manufacturers paints an optimistic view, revealing that passenger car sales in China reached their highest point in 5 months, totaling 2.05 million units in May 2023. Although electric vehicle sales were slightly below the peak recorded in December 2022, they still amounted to 717,000 units. So in the first 5 months of 2023, new electric vehicle accounted for around 35% of all passenger cars sold in China. So this re-echoes the penetration rate chart I showed you earlier. Okay, we expect steady revenue growth for the company in 2024, driven by Jabil acquisition, which will create synergies to boost overall financial outlook. As I mentioned earlier, the company acquired Jabil's mobile business in September 2023, creating synergies with current component products and driving share gains in Apple product categories. Its Android business is expected to see recovery thanks to titanium upgrade. We expect high-end smartphone recovery to be positive to BYD electronics shipment mix and demand from major clients, including domestic handset manufacturers, Huawei and Xiaomi, will drive business growth in financial year 2024. AI server will be another growth engine. The company's long-term cooperative relationship with NVIDIA and its own strong technology and manufacturing capabilities will provide unique competitive advantages for its AI server business, which will become another drive engine. Okay. Actually, the timing, its share price has risen quite substantially over the last half months, from around 23 Hong Kong dollars. Now today is trading at 35 Hong Kong dollars, partly because the Hang Seng Index company recently announced that during its quarterly rebalancing in June, BYD Electronic will be included as a constituent to the Hang Seng Index. It will become blue chip, so-called blue chip. So it becomes a catalyst for the share price. But we still see some upside. This is the 5-year forward PE band of the company. It was at the early May when it was still trading below -1 standard deviation. Now it's already trading at fair value. The projected earning per share this year will be 2.25 yuan, equivalent to around 2.5 Hong Kong dollars. At fair value of 13.527 times, the price should be 33.4 Hong Kong dollars. So now it's already above the fair value price because of the stimulus from being chosen as a Hang Seng Index constituent stocks. So we are, if we project +1 standard deviation, around 16.5 times valuation, it will give a target price of 40.86 Hong Kong dollars, implying more than 10% upside as of the current price of 35 dollars. Okay, so these are the target price for BYD Electronic and Sinopharm 1099. As for Chow Tai Fook, the earning per share, projected earning per share for 2024 was 81 Hong Kong cents. At -1 standard deviation of 13.728 times, it will give a target price of 11.1 Hong Kong dollars. Now it's trading at 10.6. So at -1 standard deviation, the target price is not too far away. But at fair value of 16.983 times, close to 17 times PE, it will give a target price of 13.75 Hong Kong dollars, implying 30% upside as of the current price of 10.6 Hong Kong dollars. Okay, Wong with the projected earning per share of 0.3 yuan for financial year 2024, equivalent to 33 Hong Kong cents. At fair value of 14.625 times, it will give a target price of 4.83. And at +1 standard deviation, equivalent to 16.82 times PE, it will give a target price of 5.55 Hong Kong dollars. Now it's trading at 4.75. So the 5.55 target price implies 16.8% upside as of the current price of 4.75 Hong Kong dollars. So there's a follow-up on the target price for Chow Tai Fook and Won. Okay. Okay, now comes to Q&A. But first of all, let's follow up on the two questions that I did not answer last week. The first question was about Intron Tech 1760. One viewer asked, can we explain what happened to Intron Tech stock price? Because last year, on 8 September, Phillip Security released a research report on Intron Tech when it was $3.50 per share, recommending us to buy with a target price of 4.15 Hong Kong dollar. However, it has been on a downhill since and now is around 1.98 Hong Kong dollar. Please explain what happened. This is mainly due to the fact that Intron Tech's performance in 2023, because by the time we released the research report, it has not announced its full year results for 2023 yet. But it ends up its 2023 performance was significantly lower than expected, about 30% lower than our analysts' previous expectations. And the company's previous guidance was too high, with gross profit margins significantly below expectation, reflecting fierce downstream competition due to automakers slashing prices. And moreover, the company has changed its original pricing mechanism of about 20% cost plus. In the past, there's some protection to its profit margin because it adopts a cost plus pricing strategy. And the cost plus percentage is 20%. But because of competition, it has changed its original pricing mechanism of this cost plus strategy. So it causes gross profit margins to trend lower. Okay. The other question was, do we have visibility of inflow of foreign institutional fund into Hong Kong market over the last 2 weeks up to date? According to HSBC statistics, as of last Thursday, mainland stocks had recorded a net inflow of $3 billion in foreign capital in May, which is more than $800 million for the whole of April. It was only $800 million. But for up to last Thursday in May, we saw an inflow of $3 billion in foreign capital into mainland stocks. The amount was the same as in March, and it is expected to record net inflows for 4 consecutive months. Among them, Asian registered funds have further increased their holdings of Hong Kong stocks, which are the most promising market among active investments. So this year, the Hong Kong market outperformed a lot of other regional markets. Hang Seng Index was up 11% year to date. Although global emerging market funds increased their holdings in mainland stocks by 0.8 percentage points in April, they were still slightly lower than the index benchmark, reflecting a cautious attitude among fund managers. It is believed that the rise in H-shares last month mainly came from mainland funds and hedge funds. Still, global emerging market funds, fund managers are acting rather prudently. Nomura also issued a report that counted 50 large emerging market funds. 72% of the holdings of Hong Kong stocks and mainland stocks are still lower than the index benchmark. The proportion is lower than the 78%. There's some improvement already because last year it was 70% lower than the index benchmark. Now it was 72% lower than the index benchmark, reflecting a weakening degree of prudence. Okay, it is believed that if the mainland economy further improves and the stock market rises, investors maybe more optimistic and support more capital inflows into both the China market and Hong Kong market. Okay, so that's a follow-up on the two questions last week. Okay. Let's see what are the questions from the viewers today. Can you give your perspective on the Chinese government latest fund of 4.7 billion for the chip sector? What are some of the companies worth exploring? Okay, I think that's the latest news about the third phase of the fund to help the growth of semiconductor industry in China. And this is the largest in terms of scale compared to phase one and phase two. And this time round, the 6 state-owned banks, including ICBC, Bank of China, Construction Bank of China, and Agricultural Bank of China, also invested, injected capital into this fund to help grow the chip sector in China. But the benefit to related companies such as SMIC and NEC remain to be seen because they did not benefit too much from the first phase one and phase two of this fund. Okay, because especially for SMIC, we expect two remaining headwinds to the company. One is the sanction from the US to curb the import of the necessary equipment for manufacturing more advanced chips by SMIC. And the other headwind is oversupply in its existing product, namely 45 nanometer and 28 nanometer chips that are still see oversupply, and also the price drop in the ASP, average selling price. So it's projecting lower gross profit margin. For SMIC, in the first quarter of 2023, it boasts gross profit margin, GPM, of 20%. But in the fourth quarter of 2023, its gross profit margin has decreased to 16% from above 20% in the first quarter last year. And in the first quarter this year, its GPM declined further to around 13.5%, okay, from 16% in the fourth quarter last year. And in its latest guidance for the second quarter this year, is expecting 9% to 11% GPM, gross profit margin, for the second quarter. So we do not expect a rapid recovery in GPM in the next 2-3 quarters because of oversupply in its mainstay products, the 48 nanometer and 45 nanometer chips and 28 nanometer chips. If you want to speculate on this, the fund, boost, the catalyst on the chip sector, I think 1347 NEC is a safer play because it's the downward pressure on its GPM is less severe than that of SMIC. Okay, how is Great Wall compared to BYD? I think Great Wall, the few cars, not the NEV, are doing well, and its profit margin has improved because it produce and sell less NEV compared to BYD. BYD now all the cars sold are NEV, new energy vehicles, and that is under quite severe price competition. So we expect BYD, the profit margin will come under pressure. As I showed earlier, is profit per vehicle decreased from 8,500 yuan to below 6,000 yuan, from 8,000 more than 8,000 yuan to less around 6,700 yuan. So Great Wall sees less pressure on the gross profit margin, and its share price, together with Geely, which sell not as many NEV as BYD, their profit margin, they see more stable gross profit margin. Okay. Are there any minerals leverage ETF or just ETF listed in HKEX? This one, I will leave it to the next webinar. We'll do more research and study on what kind of minerals leverage ETF. But I think there are not many leverage ETFs on mineral. Leverage mineral ETF. We'll check that out. Okay. Can you comment on Xiaomi, please? Is the EV business a boost or bane on its overall prospect? We are upbeat on Xiaomi because it's as for the handphone manufacturing part, is premiumization strategy bears fruit. Now we see its ASP going up and also gross profit margin also improving because now it sells more high price premium handphones in China together with Huawei. Okay, so we expect better gross profit margin for its handset business. As for the EV business, I think is quite popular, and in terms of the pre-orders and also the orders, and its production also can catch up with the order placement. So we do expect its EV business is a boost to the company rather than a drag to its overall prospect. We are expecting now its share price after hitting a recent high of $20.35. Now it's under correction, which we think is also good and a good opportunity to enter amid the correction phase. And we are expecting after the correction, it will retest the $20 resistance level, and breaching that, the next price target will be 22 Hong Kong dollars. Okay, which bank is worth buying? I think now our topic among the state-owned banks is CCB, China Construction Bank. It will benefit from a recovery in the property real estate market, and its price book value is the cheapest among the 4 state-owned banks, and the dividend yield is also the highest among the 4 state-owned banks. So CCB 939, China Construction Bank is our topic for the time being. Okay, so we'll finish here, and then I'll follow up with the question on what's the question just now? This mineral. Is there any minerals leverage ETF next in our next series? Thank you for your time.
Thank you, Mr. Wong, for your presentation. For now, before we end off the webinar today, I would just like to introduce to everyone, in case you haven't heard, that we have a new Hong Kong promotion that is taking place right now. So let me just share my screen with you. Just give me a moment. Okay, so as you can see, we have some really great prizes that you can win as long as you trade Hong Kong stocks with poems. And following what Mr. Wong has also suggested, many different stocks are part of our value stock series right now as well for your consideration. And you can also leverage off of this promotion to maximize your gains. Okay, so some of the prizes that are to be won are actually some air tickets, a pair of air tickets to Hong Kong worth about $800. The second prize is a one-night stay in Shangri-La Hotel Sentosa worth about $500, and the third prize is a mystery gift from Chow Tai Fook, which interestingly enough, the counter was actually covered in our previous value stock series, the first one actually. Okay, and we also have a Samsonite gift card, Xiaomi gift card, as well as Hai Di Lao cash vouchers as well. Okay, so some people, we actually have some questions like how do you take part? Is it just trading? Actually, it's very simple. Okay, so every time you have a buy contract with poems, in any Hong Kong counter or ETF that is available online or offline via your trading representative, you actually qualify, you actually are enabled one chance in this lucky draw, which means, to put it simply, if let's say I buy one lot of Meituan today, and then later on today I buy another lot of JD, this is constitutes to two buy contracts. So the more you diversify on the same day, the more chances you get. But if let's say you buy one lot of Meituan and you buy another lot of Meituan later, it will amalgamate and that it will not be counted as two chances, that will be considered as one chance. Okay, so just to briefly run through, sell trades unfortunately do not qualify inside this lucky draw promotion. And what is considered a value Hong Kong stock is actually all Hong Kong stocks ETFs cover warrants that can be traded online via poems or offline via your trading representative will be considered as a valid stock to take part in this lucky draw as well. Okay, so for those people who are new to the Hong Kong market, and this is might be a little bit new to you, do not worry. You will not be. You will be actually. We actually split the lucky draw into two categories. One is for seasoned investors, one is for new investors. So if you're new to the Hong Kong market, we actually have two first prizes. One is for the seasoned ones, another one is for the new investors. So every prize that you see is actually double. Okay. So there'll be a pair of air tickets for the new investors and the seasoned investors. There'll be a stay for the new investors and the previous investors as well. Okay, so just to maximize the chances so that it's a little bit more fair, a little bit more even. Okay, so this promotion isn't going to last forever, unfortunately. Okay, the validity of this promotion is actually only until the 31st July 2024. So only Hong Kong buy contracts during from the 13th of May that we started 2 weeks ago, all the way until 31st of July will be considered in this lucky draw. And if you haven't placed your Hong Kong trade yet, we have a lot of information for you on our webpage as well. Let me just paste the web link here. Oops, sorry, wrong one. Uh, that's the wrong link. Hold on a moment. Yeah. Okay, this one. Okay, the poems link, not the Google link. Okay. If you actually go to that poems link, okay, there's a lot of information here for you. We have our poems mobile tree communities. We even have our strategy and stock speak, and the investor notes by Phillip Hong Kong as well. You can register. You can subscribe for that. It's actually free as well. Receive all the latest news and updates. The replays for our Value Stocks Pick series will also be out on our YouTube page. Should be up by the end of this week, and all the entire series, all four of them will be up by the time the series concludes, before the promotion actually ends. So anytime you want to refer back, you want to go and take a look at the value stocks list again, you can actually do so. It's actually free on our YouTube channel. Okay, so if there's nothing further, we actually we can actually end our webinar here. Thank you very much everyone for your time, And once again, another thank you to Mr. Louis Wong for coming again. And please don't forget that this is a 4-part series. Okay, so if you check out your registration link, you can actually see all 4 parts of the series. So don't forget to attend the next one. Okay, thank you everyone for coming today. Have a great day ahead. Thank you.